Gupta joining in on the show right now to talk about exactly that. Gaura, hi, great to have you. 7.8 on a year-on-year basis. What is your own sense and what sectors need to be prioritized now for us to be able to maintain the 7.8% growth figure?
It's definitely stellar numbers, much higher than expectation. It even beat RBI's expectation by a very and our expectation also by a very wide margin. And if you look at the pickup and the recovery in growth, it really shows you that the services sector outperformed with a more than 9% growth. Manufacturing was also strong at more than 7%, 7.7% growth. There are certain one-offs that have helped the GDP numbers, which won't be there in the remaining of the fiscal year. So, for example, these also have to be taken care of. For example, you had a very strong supportive base. The GDP deflator also played a very large role. For example, in the services sector, if you look at the GDP deflator, the price effect, the slowdown in the price growth was much more pronounced. For certain sectors like trade, hotels, transportation, the deflator growth had slowed to almost 0.7% from more than 3.5% the previous quarter. So that also gives a big fill-up to the real numbers. If you look at the nominal GDP, that was more along lines of everyone's expectations. It around 8.8. It has slowed from more than, I think, 10.5 plus growth in the previous quarter. So that gives you, that is more in line with what we are seeing in the high frequency. For example, the high frequency is telling us certain sectors which require support, to answer your question, which is urban, which the fiscal side is beginning to address, first with the income tax cut. The second is the GST tax cut, which is hopefully likely to be implemented by maybe as early as mid-September or maybe by October, which should help durable consumption. The other one, and the most of MSMEs, are almost 40 to 50% of our total exports. They are labor intensive. They operate on thin margins. Sectors like textile, leather, footwear, garments, gems and jewelry, which will get impacted by the 50% tariffs. They will need to be, this will be more a fiscal solution where the government of India will need to provide some support to that sectors, ensure credit flow remains to that sector, ensure that they have access to working capital, and also a longer term solution will be trying to diversify away from the US in terms of export market, but that will take a while.
All right, but Gaurav, this 7.8% is indeed heartening to note, but the key question is that how likely are we in to sustain this sort of a growth number going ahead, because the tariff uncertainty will also kick in. So why don't you help us understand what sort of a changes and revisions have you made to your estimate, and what's your take on sustaining such growth number in the times ahead?
So there were a lot of one-offs which helped Q1. The first one-off was the base effect, which is the maximum Q1, and it will peter out in the remaining of the quarter. The second effect was capital expenditure. Both center and state governments, they've had almost 20% plus capital expenditure, both at the center and state government level in Q1. So there was front loading of capex. Now the government of India as well as the states are facing a sort of a slowdown on the revenue collection. You look at the direct tax collection, they're very subdued, much lower than expectations. The GST tax cut will also add another layer to sort of the revenue drag that both the center and states will face. So the capex will tend to, as the expectation is that capital expenditure will tend to moderate in the second half of FY26. The other one-off was we had a large front loading of exports to the US. In FY26 till July, India's exports to the US grew by almost maybe 20%. Right. On a year-on-year basis. There was front loading because we had the pause tariffs of 10%. So that will also tend to soften. So the second half, as per our expectation, right, the first half growth can be around 7.5%. The second half of the year growth will be around, let's say, 6%. And so overall, still very good numbers. A full year growth is around 6.6, slightly above now what RBI's estimate was at 6.5.
Sure. Okay, so 6.6, slightly higher than that RBI estimate. Gaurav, we'll be watching out for that. Thanks so much for your time this morning.
Thank you.